should we start with maybe just like the history of Japanese monetary policy, and then we'll dig more into where the Bank of Japan is today?
Yeah, absolutely. Yeah, I've been studying Japan for like 2 years now. Their monetary policy, what they've been doing, the actions they've been taking, to try to prevent this deflationary crash that they created, right? The story is, it's obviously can go back to World War II, but really I would begin more contemporarily in the late 1980s, where the Ministry of Finance and the Bank of Japan are trying to simulate like a massive credit bubble. And so what they start doing is they start creating window quotas for banks to create a certain amount of loans every single month. There are, basically demands made by the central bank for even non-financial firms to borrow, and for residential households and commercial firms to borrow. And there begins a massive, speculative bubble through, I would say, 1982 that peaks ultimately in 1989, 1990, and starts to burst in the early 90s. And we have about a decade of just falling GDP, and falling inflation, and of course falling asset prices. So the Japanese stock market falls 75%. The housing market, depending on how you measure it, falls between 50 and 80%. There's a huge burst, and suicide unfortunately becomes the leading cause of death for men between 20 and 45. Wow. So it's just this huge economic catastrophe.
What was this time frame again?
This is 1990 to about 99, 2000.
Okay. So kind of a slow motion burst.
Yeah, in the aftermath of the credit bubble burst. Because again, the Japanese had gone so far in stimulating credit that they had, like, there's 10,000 different measures you can use. But for one example, the Imperial Palace in Tokyo was valued at more than all the real estate in California. Like a single, 4 square miles was valued at more than all the real estate in California.
Wow.
And same with Japan itself. Like all the Japanese real estate was valued at 50% of what all the world's collective real estate was in the late 80s.
Wow.
So and that's indicative of how extreme this bubble had gotten.
That's pre-savings and loan crisis? That's when
this is post. So savings and loan was mid 80s. So this was post savings and loan crisis.
So post savings and loan crisis, so you're still in this massive credit bubble. Okay.
Yeah. This is 1989.
Okay.
So yeah, the very peak of the bubble.
Okay.
And the Nikkei hit, I think it was 3,900, hit the top tick, and then it fell like consistently for like 20 years, basically. It just continued falling and falling and falling. And it wasn't a type of crisis that you normally would see where like 2008 was just a rapid, like there are seminal moments that you can remember, like, oh my God, this, AIG fails and Bear Stearns failed, and then, Lehman Brothers goes under. It was more of just like a slow roll of just another small firm goes bankrupt. The Nikkei falls another 2%, and it just slowly collapses. And the Bank of Japan and the Ministry of Finance were doing like kind of counterintuitive measures to try to fix this. They didn't really know what to do. Ironic, given that they'd actually created this mess. But finally, when the Bank of Japan got independence in the late 90s, it decided to enter what was called ZIRP, so zero interest rate policy. So they started cutting rates all the way down to zero. And then in 2001, in March, they began QE, and they were the first central bank to ever run QE, and they were also basically the ones who invented it, right? They were trying to figure out, cook some new monetary pie to fix this problem that they had created. They're trying to concoct some new scheme, and so QE was their first program that they did, and they did it for a decade, and then in the aftermath of the 2008 financial crisis, they were trying even harder to stimulate aggregate demand to improve the Japanese, the finances of the Japanese economy, meaning like stimulate a credit bubble again and an asset bubble. And so in 2016, in January, they cut rates not only from zero, but to negative. So they went into negative rate territory, negative 0.1%. And then September of that year, they started yield curve control. So that basically means they manipulate the entire yield curve lower. And they'd already been doing forays into the bond market as part of their QE and of QQE. But now they were basically saying, no, we're not just going to control the short end and just buy a set amount of bonds. We're going to bring the entire curve to where we want it to be, and we'll do unlimited purchases every time the yields go above. Wow. And so that is a huge part of why Japan is where they are today. Is the Bank of Japan is stimulated credit growth to the max and ballooned their balance sheet, to well in excess of 100% of GDP. And they've essentially trapped the Japanese economy itself in a black hole of debt. I mean, it's 266% debt to GDP at the public level, 120% at the private level. Like, this isn't easy to escape.
Unserviceable, more or less. I mean, especially the 266%.
Exactly.
When you said Bank of Japan was the first central bank to engage in quantitative easing, what does that mean exactly? Was quantitative easing then something different than just money printing in the way you're using that? Or because, I mean, historically, there's been other central banks that have monopolized the currency, counterfeited it, inflated it. So what did you mean by that specifically?
Quantitative easing in the sense of like the modern interpretation is, right? Because previous times the bank would like actually physically print money. The central bank could actually physically print money. But now in the digital age, all they had to do was create bank reserves on their own ledger and then give those bank reserves to banks and then swap those reserves for assets on the commercial bank balance sheet.
Got it. So mechanically, it was just the database update versus the actual physical printing of money.
Exactly.
Okay.
Yeah.
Gotcha. But the consequences are the same or similar?
Yeah, exactly. I mean, they were doing small, rounds of QE at first just to test it out, and they slowed the descent of the Nikkei and then eventually stopped it and it bottomed. But they were actually failing to induce any sort of, major bull market in equities until they started yield curve control and basically ramped it up to unlimited QE in 2016. And that's when you see the Nikkei finally start to emerge from this 20-year, 30-year bear market.
Right.
Yeah.
Gotcha.
Because the deflationary force was so strong from this massive bubble they'd created that it took this level of, stimulus to finally get the markets moving up.
Wow. And I mean, that's after how many years of decline then before?
So the Nikkei finally started rallying in 2016, and that's 26 years after the decline started.
So a 26-year bear market.
Yeah, essentially.
Holy shit.
Yeah.
That's crazy.
And only this year have they broken the new all-time highs.
Wow.
So
not only did it take the stimulus, obviously the unprecedented stimulus to, I guess, get it into the bull market, but it also took that 26-year sell-off. So that gives you an idea of just what magnitude this bubble was. Like, is it one of the biggest ones ever?
Yeah, I would say. And, Japan's unique because they've been able to defy monetary gravity for much longer than people think. And the reason is because they have, first of all, they have a positive current account and they are net exporters. So that means they're earning money on stage.
Earning more
net.
than they spend.
Exactly, generally. And then they also have an insanely low monetary velocity because of their culture, but also because of their demographics.
So a lot of savers.
Exactly. Yeah. Everyone's a saver and everyone is an investor and no one's a spender. And so when the government spends more money into the real economy, that doesn't result in as much inflation as it would in other countries as quickly. Yeah.